I recently spoke to a couple in their late 50s who were paying over $18,000 a year in fees to their financial advisor, and they didn't even realize it. On top of that, they had no clear idea when they could actually retire or how much money they'd be able to spend in retirement. As an independent financial planner, I come across situations like this all the time, where people are not only in the dark about how much they're paying their advisor, but also not getting the guidance they deserve for the fees they're paying. So in this video, I wanna go through 5 key things you should look out for in an advisor and planner. And if you start to realize your current advisor doesn't measure up, stick around to the end of the video where I'll give some clear steps on what to do next. The first thing to look out for in an advisor is certifications. Now, in our industry, typically the top certifications are on an investment advisor side, you want to look for a CFA, a Chartered Financial Analyst. And this is someone that's gone through a lot of education to learn how to review stocks and portfolios and build portfolios and risk tolerance, etc. So if you're looking for an investment advisor, you probably want to find a CFA. The level below that would be a CIM, someone that has some training but not as much training as a CFA. On the planning side, so if you're looking for a financial planner to build your financial plan or a retirement plan, you want a CFP, a Certified Financial Planner. That's the top marks in the industry, and someone who's gone through the education and continues to keep their education up, goes through an ethics process, etc., to make sure that they have the qualifications to give you the planning that you deserve. Now, for a lot of you, you're dealing with advisors, and the advisors are at a financial institution, probably a big bank or something like that. And you might wonder, like, they don't have certifications, but they're called a financial advisor. And that's where the industry, we're trying to clean it up, but we're not there yet. And so the reality is when you walk in and say, yes, I'm a financial advisor, what education do they have? What credentials do they have? A lot of times they have a mutual fund sales course or maybe an insurance course that literally takes a few weeks to maybe a month to complete. They may have been doing it for a while, but what is the education? What's their expertise? And so don't be caught off guard of, well, I work with a financial advisor. That really doesn't mean a whole lot in Canada here. So ensure that the person you're working with is qualified to give you the advice you're looking for. And that starts with those certifications. Now, there are many other certifications in our industry, some that take a lot of effort to go through. I took a CLU, a Chartered Life Underwriter course, which is more advanced estate planning. Many on our team have that. So there's other great designations in our industry. And that's why I say, talk to your advisor. They might have a bunch of letters behind their name. Ask them what they mean, what education, what's the continuing education around that. There's a lot of people in our industry that have put a lot of time and effort and have really high level of skill set in a certain area. And that might be what you're looking for. So again, do your homework, talk to people. If they have letters behind their name, ask what they mean. I used to work with a guy that had DAD behind his name, and it was literally, he's a dad. Well, don't be caught off guard by stuff like that, right? Make sure they have proper credentials moving forward. The second thing you want to look for in an advisor is the fees and transparency. And when I say transparency, it's both around fees, how they work, what they sell you, if they sell you anything. You really need to understand, number one, how much fees you're paying. A lot of you have gone into that relationship with your advisor with a blindfold on. You don't know if your advisor is truly a qualified advisor, and you also don't know what you're invested in and what they're doing for you, what they're providing for the fees. Now, a good advisor or planner will be very upfront with their fees. In fact, a lot of planners like our team are a fee-based model, meaning that you can actually go to our website and learn exactly what we charge for our services. And I like that transparency. Again, fees, you understand what you're paying, and transparency is right there on our website. We have nothing to hide. A lot of financial institutions and financial planners, it takes a long time, right? You reach out to them, well, you know, what do you charge for your plan? Well, give me a call, set up a call. It takes too much time, too much effort, too many calories burned to figure out what you're actually paying. Like, if that's the case, move on to the next one. There's lots of advisors out there that are qualified to work with you. And again, remember, when you start looking for an advisor, are they an investment advisor or are they a financial planner? Typically, a lot of advisors say, well, we do both. We'll sell you some mutual funds and we'll pretend to do a plan, or we'll at least take your information, put it into software and hit generate. Don't be paying for that. That's very little value to you. Ideally, if you want a really good team behind you and you have a bit of assets, that does help obviously, but Ideally, you want a planner and an advisor, someone that does the investment, someone that does the planning, and those two people work together. That's the best relationship you can have. The third thing you want to look for in an advisor is a fiduciary duty. Is that advisor making the decisions that are best for you and not for them? And really, this needs to be an open-ended conversation with that advisor planner to figure out, what do you do? How do you do it? Are my best interests put to heart? I always say a good measuring stick for this is if the name on the door of the firm is the same name as the investments you hold, I don't know if there's a true fiduciary duty there. Like if you walk into a financial institution, ABC Co., and the investments you have are mutual funds of ABC Co., is that truly a fiduciary relationship there? Or have they just sold you products that they're paid to sell and they have to sell and they have to hit bonuses? I would say the latter. So make sure you really understand, does your advisor, does your planner have a fiduciary duty to do what's best for you? The fourth thing you want to look for in an advisor is personalized advice and expertise. And what I mean around this is, again, going back to, does your advisor do a bit of everything, but it's really not that great? Again, you want to find experts to help you walk through different stages of life. You want to help find an expert on the investment side, on the planning side. Again, as you transition to retirement, your financial planner, do they have the expertise on decumulating assets, drawing down assets, looking at that? A lot of planners just don't do that. And they try and stumble through it, but don't let your planner stumble through that on your plan. Like, why would you pay for that? Why would you let your retirement be thrown away, essentially, by a planner that's learning how to do it? Right? You want to find someone that has expertise in that field. Same with investments. You want to make sure your investment advisor has the expertise to build the portfolio that is required, especially if you're in retirement, to match your plan. Like there's a process to this. These things have to work together. A good financial planner or a good financial advisor will have an expertise in an area. And it could be investments. It could be, financial planning. Maybe it's RDSP plan. I've met advisors that focus on registered disability savings plan. Like that's out there. So if you're looking for that, that is out there somewhere. There's advisors that focus on GIS planning. So for low income Canadians looking to maximize GIS, there's advisors for that. Search that. There's advisors that focus on retirement planning. That's our office. All 8 of our planners on our team, we focus, all we do is retirement planning, drawdown, tax strategies, etc. That's our specialty. In fact, often I will have a call with a 40-year-old couple, and they say, yeah, we're building up, and here's where we're at. We feel like we're on track, but we just need some roadmap. And we actually refer that out to a couple other different advisors because that's not our expertise. We could do it, but again, we spend our time, we put all of our effort into that retirement planning. So find an expert in the area you're looking for help in. They're out there. Do your due diligence and make sure you find that person that can give you that expertise you deserve. And lastly on this point, don't fall for the all-in-one advisor. The all-in-one advisor is very much from the 90s, early 2000s. I was an all-in-one advisor when I started my career. That's just what everyone did. Things are moving to becoming an expert, right? And I know when you deal with experts, you have to deal with a few more people, but trust me, you're gonna get a lot better advice. And ideally, you build a team that actually communicates together. That's our retirement income program where you get planning, investments, 2 separate firms, but we work together hand in hand to make sure your plan is great and it lines up with your investments. That's what you need to be looking for. So if you're looking for an all-in-one advisor, you're probably not going to get the investment advice you're looking for, and you're probably not going to get any type of planning at all. And if it is, it's very surface level and it's typically your information, put into software, hit generate, and little value there. So try move away from the all-in-one advisor and start looking for experts in the fields that you need help with. The 5th and final point here is a good advisor should give you peace of mind and a clear roadmap. And really, when you're working with your advisor, do they make you feel comfortable? Do they make you feel like, yeah, you've answered my questions, you've built out my plan, you've taken care of my investments well, whatever it is you're looking for. But make sure that you feel a real good comfort and peace of mind behind what they've built. And I always say, like, when we build a retirement plan, I always tell all of our clients, I don't want to just build the best plan for you. I know we can do that. I want to build a plan that lines up with what you're looking for, that you understand it, right? For all of our couples that we deal with, we make sure there's typically one person in the household that runs the finances. But guess what? That other person, they need to be involved at least in a few of the conversations and have a high level of understanding, not a deep, but high level of understanding of kind of what's going on and where. And so make sure you deal with someone that can give you that peace of mind, that comfort, that can answer the hard questions that you're looking for answers to. So where do you go from here? How do you make sure A, your advisor is good, your planner is good, and if they're not, how can you find a good one? So I want to give you 3 action steps that will walk you into this to make sure that you have the best team around you for what you're looking for. The first thing to do is ask questions. And so many of you are typical Canadians, we want to play nice, we don't want to ask the hard questions. But the reality is that it's your hard-earned money. If you've been paying 2.5%, 3%, any fee for many, many years, and a lot of you are sitting in that bucket, you've been paying 2 to 3% in fees for 30 or 40 years leading up to retirement while you've accumulated assets, and you've had your blinders on. You've had no idea what you pay, how the investments have done, and you've been intimidated by your advisor. Like they always wear, I talked to a lady yesterday, she's like, my advisor always has like this iron blue dress shirt, and I feel like it was iron like seconds before I walked in there, and he intimidates me. Look, if that's your advisor, that you need to move on, right? And not that there's anything wrong with the dress shirt. It's more the intimidation. Like, are they bringing you that comfort, that peace of mind that I just talked about? But you need to ask the hard questions. What am I paying? How have I done? What's your expertise? What's your credentials? How am I better off working with you than going to Joe next door, to Sally next door? These are the questions you need to ask your advisor. Hard questions. What do they focus on? What is their area of expertise? And does it line up with the stage and age of life that you're currently in? The second step is, after you've asked the questions, is if there is a change required, there's 3 options for you, right? You don't just have to go to the firm next door. And the 3 options are DIY. You can move fully DIY, and this really isn't for everyone, but it's probably for a very small handful of you that should be looking at that, right? You have the skill set, you have the ability. Now, as you enter into retirement, it is more challenging because cash flow, you're actually drawing your money out. It's a lot easier to save money and invest money and buy good companies versus selling them and drawing money out, and how to do that. So just be aware, if you're entering into retirement, moving into DIY is a bit more complicated than doing it well before retirement. You could keep working with an ongoing advisor. Again, I think this is where a lot of you need to step away from the all-in-one and move to more of an ongoing advisory relationship, but working with 2 firms, or at least a firm that has expertise in many areas. And be aware, a lot of firms will say, yeah, we can do a plan for you. You just got to bring your investments over. So really understand, like, how does this process work? Who am I working with? What's their names? How's it going to work? What's the process? What's the benefit of working with you? But again, that ongoing relationship for a lot of you is a good solution. It's going to give you that hand-holding you need. So make sure, again, especially if you're someone walking into retirement or in retirement, have a really good plan, have a really good investment that work together. And a good ongoing team should continue to monitor your investments, your cash flow needs, and the plan should be continued to update. Things can happen. Life events do happen, right? Performance. Maybe performance does really good. How does that change your plan, if at all? So again, that planner should be updating that. Your investment should align with the plan and the ever-changing ongoing needs of that plan over time. And the third option, if you're looking for a change, is a fee-for-service advisor or a fee-based advisor. And this is someone that charges a fee for a service. And this is quite difficult to find on the investment side. Typically, investment advisors are looking to actually manage the money. Again, I haven't come across a good option here, but if I do find one, I'll mention it in a future video. But it's hard to find someone that you can pay to give investment advice and then you do the investing on your own. Again, if you know someone, leave a comment below. We could do our due diligence and look into them a little bit for the rest of you looking for that option. On the planning side, though, a lot of you might be DIY, or you're happy with your investments, or you're working with an investment counsel firm that is charging you a reasonable fee but not doing the planning. And that's where a fee only or a fee for service plan comes into play, where you hire a qualified financial planner to just build out a plan, to build out a roadmap for you. You know what your costs up front, you can then take that plan, work with your investment team to implement that plan. So again, we offer fee for service retirement plans. You can learn more at parallelwealth.com/planning. There's lots of advisors out there, and this ties into the third piece, which is to interview multiple advisors. You want to talk to a few people. Again, I have a lot of people that talk to us, that talk to other firms that I know of here in Canada, where, find a good fit for you. Like, we may not be the best fit. I feel like we do a fantastic job and obvious, but again, you might feel, well, I really connected with Sally a bit better than Parallel Wealth. That's fine. Find someone that fits what you're looking for. Again, not many firms specialize in retirement planning, right? What does the firm do? Fee for service? They will be a specialist in something. What do they do? What do they specialize in? But that's a great option for many of you to get unbiased advice. In fact, I would say about 50% of the plans that we do, people have an advisor. They might be at the bank or wherever, but they don't trust their plan. They don't like their plan, or their plan hasn't really built out an RSP meltdown and looked at CPP timing and laddered income and all these things I talk about on the channel that can bring a lot of value. So they'll hire us to build a plan. They then bring that back to whoever they're working with currently. So again, there's lots of options there, but you want to look at, if your current setup isn't working, look at one of the three options. DIY, another ongoing relationship, and again, interview a lot of people for that, or a fee-only planner like our firm, where we can help you out. If you want to learn more about our services, again, we offer the ongoing and the fee-only, so we kind of have both those buckets. You can book a call with our team. If you go to parallelwealth.com/planning, there's a link on there to book a call with our team to learn more, to see if we're a good fit for you. Because at the end of the day, if you're someone that's not happy in your relationship, you might be DIY looking to have a planner as you enter into retirement. There's many different scenarios here, but I know a lot of you are disgruntled with your current relationship. You're paying way more fees than you realize. You're not getting anything. Again, it's okay to pay fees if you're actually getting value for that, but many of you are not. So find a home for your planning, for your investments that are reasonable fees, that you're getting value for, that you have trust in the relationship, and they bring that peace of mind.